Okay, Assalamualaikum warahmatullahi wabarakatuh. Today kita nak bercerita. I'm so sorry. Oh, sorry. I have to. sorry. I tuned back. Okay. So, Assalamualaikum warahmatullahi wabarakatuh. It's me again, Miss Siti Fatima. I hope you are not bored seeing this face again. So, today we are going to discuss about chapter 5, financial and risk management. So I believe all of you, you have some financial difficulties or maybe some financial planning that you have in your life. Okay, same goes to me. So, okay, so let us check before I run a lot. So let us check what we are going to learn for today. So basically, these are the learning outcomes that you are going to learn by today. So what is a budget? The budget process, types of budget, system of budgeting, principles of effective budgeting, and financial reporting. So these are the things that you are going to learn by the end of this chapter. Okay. So now we want to take a look on the financial management. So according to Allen, 2008, they define financial management as a decision that concern the sourcing, planning, allocation, monitoring, and evaluation of the money resource. So Allen and friends, they said financial management basically it is a decision or some decisions concerning the planning or allocation. How we are going to plan our money. How when we get our allocation of money, for example, we have our salary. So how we are going to divide the money into a good and into a correct source. Okay, so for example, you have received 1,000 ringgit for your salary, for example, just an example. Okay, so 1,000 ringgit, and then you have to pay for rental, for house rent or room rental about 300 ringgit, for example, and then you have the balance of 700, and then you have to buy some groceries for your house, I think around 300 ringgit, and then you have left 700 ringgit. Okay, sorry, 300, 600, 400 ringgit, I'm so sorry. Okay, and then out of 400 ringgit, you make some saving around 100, and then you have 300 left. Okay, so that 300, you also need to have planning. Are you going to have that money until the end of the month, until the next salary or not? Okay, so that is considered and called as financial management. Okay, so mismanagement of finance can lead to unforeseen operational risk such as safety, crowd control, and legal problems. So these are the things that will happen if you don't know how to manage your finance accordingly. If you don't know how to manage your money accordingly. So if you have 1,000 ringgit cash in your hand, but you don't know how to manage your money, you will lose your money in just in a blink of eye. Okay, so it is very important to have a very good management and financial planning. Okay, so next, financial management according to Wagen and Carlos 2005. The first step in financial management of an event is to ask the question below. Okay, so these 7 questions, basically it's quite a lot, but I have summarized on these 7 questions. So these are the things that you need to ask regarding the financial management of an event. So the first one is the aim to make a profit. So is the aim to do the event is to make a profit? Okay, so you need to check back the objective. You need to check back the purpose of how you are going to conduct the event. So are you going to make some money for your event, or it's just a charity event, or maybe it's just a branding event? Okay, so you need to determine the purpose or the objective of doing that event. Okay, so number 2, how much will the event cost? So will the cost will be a higher cost, or maybe you can lesser down, or you can cut a bit the event cost or not. Okay, so you need to determine, or you need to have a scheme or a list of budget. Okay, and number 3, what are the revenue sources? So when or how or in what purpose or in what kind of situation that you are going to get the revenue. Okay, normally the revenue will come from sponsor. Okay, so if you have if you caught if you happen to be you caught a big jaws ataupun kita panggil jerung besar macam tu, okay, so you will get lots of revenue. Okay, so if you happen to be you catch just a small fish in the sea kan, in the deep sea we have lots of types of fish kan, so you know how to catch the fish. So it's just a simple calculation. Okay, I'm saying that. So if you have a big sponsor sponsoring your event, and then the revenue will be high. So if you have a small revenue or small people or sponsors that going to sponsor your event, and then you will have quite a small revenue. Okay, so these are the sources of revenue. So later on we will discuss more about this revenue. Okay, and then number 4, how many tickets must be sold to break even? So break even, what is break even? So I will share with you later what is break even. So basically break even in a simpler words is you are not having any revenue or profit, you are not having any loss. So that is called as break even. Okay, so how many tickets you must sold in order for you to get a break even? For example, if you are conducting a concert, okay, so if you are conducting a concert and then you need to check how many tickets. For example, you said, okay, after I calculate all the costs, so we need to sell at least 5,000 tickets in order for us to break even. Okay, so if we manage to sell only 4,900, and then what happened? It will be lost. Okay, if you manage to sold 5,100 tickets, so what happened? You will get some profit. Okay, so you need to check and you need to have a break even analysis, which is I will tell you later. Okay, and then number 5, what is the cash flow situation? So is it important to have a positive cash flow? Is it important, or is it a trigger or alarming for us when we have a negative cash flow? Okay, so you need to check meaning of the cash flow, meaning you have cash in hand. Okay, so do we have so many cash in hand or not? Okay, so is it good to have a good cash flow or not? All right, so number 6, what control systems are needed to avoid fraud? Do you have any system? Do you have any planning, or do you have any documentation that will always check for you to have a check balance, the in and out of the money? Okay, so how do you know this system is basically acceptable and suit for your event? So you need to check how you control your money. And lastly, how will legal and taxation obligations be met? Okay, so if you are doing an event, you need to check. Are you obey on the legal implication or not? Okay, so are you going to pay for the tax later on or not? Okay, so you need to check all these questions before you are making or before you are organizing for any event. Okay, is that clear? Right, good. So next point or next slide, we want to check or we want to discuss on the budget. So basically, budget is a simply or it's a written estimate of anticipated income and expenditure. This is according to Rayleigh and Schroner in 1993. So why it is considered as a written estimate of anticipated income, meaning you don't know how many or how much income that you will receive. That is considered as anticipate. And expenditure, sometimes we are going to what we call that, we are going to spend more instead of getting more income. Okay, so the budget is also known as a numberized plan, a plan that serves as an essential instrument of control. And according to Allen 2008, it is basically, the budget is basically as a quantified statement of plans. So what is quantified? Quantified is quantifiable. It means adalah sesuatu yang boleh dikira, kan? So that's why we said it is the budget. So meaning it is something that we can always calculate, we can always count. So the budget process includes costing and estimating income and allocating financial resources. Okay, so in the budget process, what we are going to include, what we are going to document, what we are going to write, we need to check everything. We need to write down everything regarding the costing and estimated income that we have. An event budget is used to compare actual costs and revenue with projected costs and also revenues. Sometimes we have mentioned and we have determined what is our projected revenue and cost. For example, for one event, you may be allocated around 80,000, example. Okay, so after you have done an actual cost and actual revenue, so it is stated there, or instead of 80,000 for our projected revenue, we only spend around 60,000. Means you have a balance of 20,000 that you can carry forward, or you can utilize that money for other matter. Okay, so do you understand? Good. All right. So preparing a budget is part of the initial planning stage. So in planning, basically we plan everything. So we need to have budget, or we need to have the financial statement, because it is very important. A budget includes projected revenue and expenditure, from which an estimate of net profit or sometimes net loss from the proposed event can be ascertained, and the budget is part of the event proposal. So when we are making our event proposal, it is very important to have the budget. Okay, so next, this is basically the event or the budgeting process. So before you are doing anything, you need to determine what is number one or what is number two, and what is the whole process of the budgeting. So the first one, according to Alan, so the first one, what you need to do is establish what is the economic environment. So you need to check what kind of event that you want to do. Okay, so what kind of event that you are going to organize? Is it related to have some benefit or some profit, or maybe it's just for charity, or it's just for branding? Okay, and then you establish budget guidelines to fit objectives, including sub budgets. So you need to check, you need to make sure that the budget must fit into your objective. It must be synchronized. So if the objective is basically to get lots of profit, you must have less cost, and you have to maximize your benefit and profit. Okay, and then identify and estimate cost areas and revenue sources. So you need to make a list of what are the things that going to be your cost, and then you need to have a list of what are the revenue sources, and then prepare a draft budget for committee and sponsor approval. Meaning, after you determine the revenue sources, you need to prepare a complete draft budget in order for the committee and also sponsor approve on that draft budget. And then lastly, evaluate the draft budget and prepare final budgets and control ratios. So in this process, the last process, meaning you have to evaluate everything and prepare in order for you to launch your event. Okay, so next, so this is basically the final process which I advised and I mentioned earlier. Okay, so right, okay, so we have come to the types of budget. Basically, we have three types of budget: the operational budget, the equipment budget, and the capital outlay budget. So these are the three things that is always important. Okay, always remember. So the first one, we have the operational budget. It has a lifespan of 1 fiscal year. Some entities operate in a 2-year budget. So this operational budget known as a short-term budget. So what we have in operational budget, normally we will have the cost of salaries, office supplies, travel, advertising are paid from budget. So meaning any budgets or any money or any cost that relates to operational of that particular event, it can be put under the operational budget. Okay, so we need to pay for salary, we need to pay for advertising or advertisement for our marketing budget, and we need to buy some office supplies, we need to buy banquet table, for example, we need to buy stool, for example. Okay, So these are the things that you need to put under operational budget. Okay, so next we have the equipments budget. So what is basically equipments? Okay, it is included in either the operational or the capital outlay budget depending on the cost and anticipated lifespan of equipment. So equipment basically any object that has a predetermined minimum lifespan and predefined minimum value more than 500 ringgit and more than 5 years. For example, you bought bicycle ergometers, video and audio equipments, you bought computer, you bought table, you bought what else? You bought something like staging. Okay, so this equipment budget is known as intermediate or long-term budget. So basically it is known as intermediate budget. Okay, not too short-term budget, not too long budget. Okay, so basically you will have some depreciation for this equipment. For example, you buy some banquet tables. So for example, the lifespan of that banquet table lasts around 5 years. So after 5 years, you need to buy another banquet table, for example. So you can put down that budget under the equipment budget. Okay. So next, we are going to check on the capital outlay budget. So this is known as a long-term budget intended to enhance existing facilities either through new construction or renovation. Okay, I want to ask you a question. Are we doing a major renovation? For example, we extending or extend our building. Okay. For example, we extend our kitchen, for example. Okay. So are we doing the renovation monthly? Okay. Or maybe are we doing the renovation once in a while, or maybe once in every 5 years, or once in every 10 years? So yes, basically we are doing the renovation in once in every 5 or 10 years, like that, once in a while. Okay, so high cost equipment such as automobile may be purchased from this type of budget, like renovation earlier, and capital outlay budgets, major capital outlay and minor capital outlay. So for this budget, basically it requires a lot of costs. Okay, it requires huge costs. For example, you bought automobile, you bought car, or you bought a property. Okay, so it does not require a small budget. It requires lots of budget, which is you need to pay more for that particular budget. Okay, is that clear? Okay, June. Okay, so next we are going to check on the systems of budgeting. So what you need to do is consideration such as organization size and purpose, number of employees, sources of funding, product or services rendered, and requirements of reporting or control agencies heavily influence which budgeting system is the most appropriate. In a simpler words, there are 5 types of system of budgeting that you are going to do. You have some options. Okay, so the first one, you have the line item budgeting. So this is the most commonly used item budgeting, which is the most easiest budgeting that has been done. So what is it about? The budget is separated into budget categories and objects. So you have the line items, both identified normally by numerical codes. For example, for operating expenses, the code would be 8400. So for the common line item, you have, for example, salaries 8410, you have travel 8420, or supplies 8430. Okay, so you jot down or you categorize under the numbering, okay, numerical codes, right? So next, these are the advantages and disadvantages of line item budgeting. So as for advantages, for this line item budgeting, it is very simple and it requires less time to administer than other methods. Okay, so it is very easy for you to check each item, and it encourages cooperative using the resources. Okay, so it has some disadvantages. So the relationship between expenditure as a specific program cannot be identified, meaning here you only put everything in one thing. Okay, so it is quite hard for you to determine the expenditure for specific items. Okay, and then one cannot tell which projects within the administrative unit are cost effective. So in this time, so in this case, you cannot check or you cannot do which one, you cannot determine which one is okay or which one is not okay for your budgeting. Okay. So next one, we have incremental budgeting. So what is it about? So the procedures are most often combined with line item budgeting in determining items amount for a new budget. These more funds are expected for upcoming fiscal year, then each budget item is increased by specified increment or conversely decrement, meaning after you are using the line item budgeting, you will have a separate budget. You will have a separate budget or additional budget for that particular line item budgeting, meaning you will have a specific budgeting. Okay, to balance funding need in object categories, a combination of increments and decrement are used, meaning you are going to slash some costs, you need to add one more cost or few costs in that particular categories. So that is meant by incremental budgeting, right? So we want to check on the advantage and disadvantage. As for advantage, of course, it is safe and easy. It is very easy and straightforward for you to use this incremental budgeting, just like the line item budgeting. And the disadvantage for this incremental budgeting, the program mediocrity may result when adequate attention is not given to the relative value or merit of each project that is funded. Okay, it is quite it is quite a big problem if you don't know how you are going to check is it an incremented or repetitive budget or not. All right. So next, we are going to have a formula funding. So this formula funding is quite common on educational scenes. A formula is applied that relates funding to operation. And basically, you are going to have this formula funding according to frequency stage, total usage, ratios, or all the benefits. For example, you are going to have your advertisement, for example. Okay, you want to do your marketing campaign, you are going to have an advertisement. So as for that advertisement, instead of you are checking on the total, you are checking on the total cost, you only indicate that, okay, we will have at least 20 times the frequency, 20 times a day to appear in advertisement in TV, like that. Okay, so it's quite hard for you to determine based on frequency. Okay, so next we are going to check on the planning, programming, budgeting system known as PPBS. Okay, so basically this is the system that was designed for a very large operation or organization. So the name also planning and programming budgeting, meaning it's just a program. Okay, it's kind of program. The system is goal oriented and directs one attention to planning and programming rather than individual expenditure. So basically, you want to know more about planning, you want to know more about programming instead of checking on each program or each course. So each program within department is separated from other program, and items such as instruction and supplies are funded separately for every program. So you will have a separate program and specific event or specific programs and supplies for that particular event. Okay, for example, you have few projects. So as for project A, you will have a separate cost. As for project B, you will have a separate cost, like that. Okay, so all right. Okay, so now we are going to check on the advantage and disadvantage of this planning, programming, budgeting system, PPBS. Okay, the advantage of using this planning, programming budget, basically it requires manager to justify what they wish to do. Meaning for each project, they will have each event manager or project manager. So that project manager will justify what you want to do. So you will have a specified budget for that. Okay, but there are so many disadvantages. The first one, it is time consuming because you need to check each and every one project manager. And then it is very complex because it is basically on the planning and programming. Okay, and then it's quite expensive to implement and operate, especially for this small event. So it is not effective at all for this small event. And then lastly, discourage sharing of resources between programs or projects. Perhaps you will have some resources that is very common for common, for example, not common. Some resources that is very common for each and every what we call that, each and every program or projects. But because of using this kind of budgeting, so you unable to share the resources together with other program. So it's quite saddening. Okay. So next, number 5, we have zero-based budgeting, which is known as ZBB. So basically, for this one, it is a goal-oriented budgeting system, and it is the most it is the most distinguishing feature that each year budget is reviewed as an isolated unit. Meaning here, for each and every year, if you are doing a same event, you will distinguish and you will make the budget, you will view the budget separately. Okay, so the budget is planned and justified from a zero base, meaning you will do from scratch, independent of what has previously existed. And lastly, to eliminate some of the problems of line item and incremental budgeting that we have discussed earlier on for number 1 and number 2. Okay, so basically for this zero-based budgeting, it is something that you start from scratch. You start from the early things that you have planned earlier, and you will determine what are the things that you need to do. Okay, so let's take a look on the disadvantage and advantage. As for advantage for ZBB, funding requests must relate program cost to goal achievement. So you will need to have a very straightforward funding request, and it must accordingly follow your event. But for the disadvantages, it is quite unrealistic to go back to square one for ongoing program for each budget cycle. Meaning, it is something that is tiring. You have to do the same thing all over again. Okay, it is very tiring, and it's very complex because you need to brainstorm everything from the start, from the scratch, and it is time consuming. Okay, so many resources are required for its implementation since you need to do everything from scratch, from square one. Okay, so next, so now we are going to check on the planning, budgeting, and reporting process. This is according to Wagen and Carlos. So as for event planning, so what you need to do is you need to have the budget. Okay, so as for budget, you need to have expenditure and you need to know the anticipated income. So expenditure is known as cost, and for income known as revenue. Okay, as for these two, you need to prepare your cash flow analysis, and from that cash flow analysis you need to determine what is your profit and loss account and what is the balance sheet. And lastly, after you are getting these two, you need to have a very good event evaluation report. Okay, so now let's take a look on the break-even point. Okay, so in the earlier on, I have checked, or I have mentioned regarding how many tickets that we are going to sold in order for us to reach the break-even point. Okay, so what is basically the break-even point? So the break-even point formula is determined by dividing the total fixed costs associated with productions by revenue per individual unit minus the variable cost per unit. Oh my God, it's so long. Okay, so fixed costs refer to those which do not change depending upon the number of units sold. Put differently, the break-even point is the production level at which total revenue for a product equal total expenses. Miss, what is that? Okay, now let's take a look on the formula. So as for the formula, break-even point is the fixed cost that you have for your event. You divide into sales price per unit, you minus the variable cost per unit. Okay, so as for the break-even point, what you have is you will have the fixed cost divide to contribution margin per unit. Okay, so what is basically the fixed cost? So fixed cost is the one which is independent of the level of sales and a fixed nature. For example, you have a fixed cost of rent, you have a fixed cost of insurance, you have a fixed cost of salary. Okay, so the one that is fixed, you pay every month on the same amount. Okay, So next you have a variable cost, which is the one that is directly linked to the level of sales. Sometimes you will have a very high sales, so that is consider something that is always varied along. Okay, for example, you will have commission. For example, for this month, you have a total of 500 commission, for example. But for next month, you will have 5,000 commission. Okay, so it is based on your effort, not based on the fixed cost. Okay, as you can see here, the break-even analysis, it is the point here. It is if you are going downward, you are going to have a loss. Okay, if you are going upward, you will have some profit, or you have getting a quite number of revenue. So that is basically a simpler way of break even. Okay, so next, cash flow analysis. So cash flow, you need to have a very positive cash flow, okay, in order for you to get a strong and a secure and a smooth event. So how we are going to calculate for this cash flow? Basically, for cash on hand before expenses, what we need is all revenues that we have, we minus into uncollected accounts receivable. Okay, so all revenues, you minus uncollected accounts receivable, meaning what you are going to receive. So that is cash on hand before expenses. So as for cash on hand, what you need to do is what you have before, cash on hand before expenses, you minus accounts payable, meaning the cash that you have, okay, for example, 1,000, so minus on all commitments that you have. Okay, for example, you have 1,000 cash, you minus the commitments around 700. So it equals to 300, meaning that is the cash on hand that you have, okay, for yourself, right? Is it clear? Good. Right. So now we are going to check on the profit and loss statement. So the profit and loss P&L statement is a financial statement that summarizes the revenue, costs, and expenses incurred during a specified period, usually a fiscal quarter or year. Okay, so this P&L statement is synonymous with income statement, and these records provide information company's ability or inability to generate profit by increasing revenue, reducing cost or both. Okay, so basically you need to check either for that particular event, maybe you will have a very good and high profit, or you will have huge loss or not. Okay, so that's why you need a very good P&L statement. So this is the example of P&L, profit and loss statement. So let's take a look on this. Okay, right. So next, balance sheet. So what does the company balance sheet tell you? Balance sheet shows what a company owns and how much shareholders have invested. So basically, balance sheet or assets, it includes cash that we have, inventory that we have, and property. Cash is known as liquid asset. Okay, then we have liabilities. Liabilities, something that is considered as our commitments monthly. We have rent, we have wages, we have utilities to pay like bills, and then we have taxes and loans plus shareholders' equity. Okay, meaning what we have, something that we have regarding our earnings. Okay, so now we want to check on what is it about on the balance sheet. It is a summary of financial balance of individual or organization. Okay, so it is a financial statement of a company which includes asset, liabilities, equity, total debt at the point of time. Okay, so now we are going to check on the balance sheet. So as you can see, the total asset 472,100 and the total liabilities and shareholder equity must be 472,100. Okay, so balance sheet normally, as for assets and equity, it must be equal and balanced. So that's why the name is balance sheet basically. Okay, so next, financial control. So financial control relates to the preparation of reliable published financial statement, including interim and condensed financial statement, and it is designed, why we need to have this financial control, why we need to have this financial system, because we want no errors. We don't want any errors in preparation of accounting records and financial statement. For example, like before, we have discussed on balance statement, okay, balance sheet. So we don't want any error happen in our balance sheet, okay? So we want all the amount must be balanced together. Okay, number two, we don't want any fraud committed. Okay, so of course there may be controls for detecting fraud when it occurs, as well as controls that try to prevent fraud from being able to occur. Okay, so of course we want to control and we don't want any fraud happen, but we need to check. That's why we need to have a P&L or profit and loss statement. That's why in any company we need to have a good balance sheet. And lastly, why we need to have a financial control? Because we want to take care and we want to overlook on the asset of the company and make sure they are not stolen, they are not lost and not damaged. So that's why financial control is very, very important in any company or any event. Okay. So why we need to have this financial control system? Okay. So these are the reasons that always we determine on how. Okay. So the purchases or other expenses are approved. We need to make sure goods and services meet expectation. Of course, we want to deliver the best to our customers. And then we need to make sure the payment is approved or not. And then the accounts are paid accordingly or not. And we need to make sure incoming revenue is checked and banked. Okay, so sometimes we have catch or we have caught a big fish. Okay, so that's why we need to have a big sponsor. So we need to check whether it is coming from a true channel and it has been paid into a direct channel or not. Okay, so we want to check, is there any flaw or fault or not. Okay, and then total revenues are recorded correctly. Sometimes we are too happy, we are so happy because we think that our revenue and benefit is so high, but at the end of the day, after we calculate everything, um, surprisingly our cost is higher than our revenue. So that is why we need to calculate everything regarding our cost and also revenue. And then debts are met, so we need to calculate every debts that we have, and then all transactions are recorded and balanced, and lastly taxation requirements are met. So if we are creating lots of huge money regarding profits, we need to pay for tax. So that's why, okay, we need not to run from the tax. So we need to pay the taxation requirements accordingly, right? So next, panic payment. So what is it regarding this panic payment? So basically, panic payment is something that is considered as unforeseen payment. Okay, it is something that is unforeseen circumstances happen, but it is something that you need to pay. For example, um, uh, you have confirmed this particular venue, but towards the day of your event, so the owner venue, oh sorry, the venue owner, the venue owner cancel last minute for for that particular venue. So you feel panic, so you need to search for other venue because you have done so many things, you have insert this venue into your marketing collateral. So that's why you need, or you are going to have that particular panic payment. Okay, so you need, by hook or by crook, you need to find a replacement of a new venue. So that's why you will grab anything that happen to be occur in front of your eyes. Okay, so in fact, if a last minute crisis, it could easily lead to a price with a high premium or panic. Okay, so basically during this stage, you will only accept what they have given to you. Okay, so you need to digest and you need to what we call that you need to accept everything. Okay, so essentially the supplier has the event manager over a barrel. So you need to pay with a high premium price. But what you need to do, you don't have any choice. Okay, so careful planning and detailed contract negotiated well in advance can prevent the situation from occurring normally. But if it is last minute, you cannot do anything. That's why you need to have a very clear and good agreement and contract. Okay, if the venue cancel last minute, they need to pay for some penalty, or maybe they need to give you or pay you full price that you have paid to them earlier. Okay, so that's why you need to always check for your contract and also agreement in earlier. Right. So next we have risk management. So everything that we do in our life, we have risk. Okay. So even you are getting or you are choosing a life partner is a risk. Okay. So risk management regarding a failure to assess the risk management involved in event can be disastrous as a result of the first one, if you're having a risk of injury, meaning your spectators or customers are injured during attending your event. So it can be a risk of injury, risk management. Number two, risk of reputation, loss of an organization or individual's goods name, meaning you are having some bad or cheap marketing. So that's why you will have some risk of reputation, meaning you will have a greater risk. And then number three, risk of financial loss, loss of assets due to theft, fire, flood, or vandalism, and so on. Number four, risk of losing facilities due to environmental damage. Okay, so if you have losing these facilities, it may be a huge capital outlay or huge renovation that you are going to take. And the last one, reason of imprisonment, failing to abide by workplace health and safety regulation, meaning something happened that you are going to prison, or you are going to fine, or you are going to get a penalty. Okay, for example, on rape cases or harassment, something like that. Okay, so these are the risks that will always happen during conducting an event or anything. Okay, so next, incident reporting. So what happened if there is a risk happen? It is a risk control process, and it is essential that every member of the event team is familiar with this process. So everyone from the higher management until the normal worker, they need to know what to report and what you need to do if you have any risk or incident that you need to report. Okay, so an incident report card is to be completed for every problem that occurs, from customer complaints to slip and falls. For example, the receipt of the incident report cards, management staff can look for patterns in the incidents for which in which this risk can better manage. Okay, so for example, last or previous year event, you have documented a few cases of accidents during event. So in next year or this year event, you can always perform better, and you can handle that risk better, and you have the prevention. Okay, because prevention is better than cure. Okay, so reasons for maintaining all documents relating to risk, why we need to maintain all this documentation, why we need to have all this documentation, because first one, we need to demonstrate that an appropriate process was in place. So meaning we need to check, or we need to inform that we have taken this matter as a serious matter, and we have taken a very appropriate action to that particular problem. And then number two, to provide a record of incidents and response, meaning we need to know what are the problems or what are the incidents or risks that happened during that day, and what are our response. Okay. And then lastly, to allow for monitoring, review, and improvement. So if happen to be the same problem or same risk happen, this year at least we have the case study, and we know how to review that problem, and we know how to improve that problem in future. All right. So next, this is the emergency report plan. Okay, what you need to do is emergency situation. You know how to have a planning elements, how to plan. Okay, what are the things that you need to plan, and then developing a plan, event specific information, and training requirements. Okay, so as for emergency response plan, you need it is known as ERP. So basically, the ERP is action families must take to ensure their safety from fire and other emergencies. So you need to have a response plan. Emergency exits, where will be the emergency exits? It must be comprehensive and address all hazard specific to our event. Okay, for example, we have an indoor facility or indoor event. So what are the hazards and what are the 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 risk that happen to be is going to happen during our event. Okay, so it must be in writing and also review. Okay, so these are the informations that we are going to have for our ERP. So the first one, methods for reporting fires and emergency. How we are going to report if there is a fire or if there is any emergencies happen to be during our event. And then number two, evacuation policy and procedure. So where are we going to go? Okay. So if there is a spark of fire, what we are going to do? Okay. So what is the first thing that emerge, or what is the first thing that triggers our mind and where to go? And then number three, emergency escape routes. Okay, so if in case there is a fire in our house, auzubillah, but where are we going to go next? Are we allowed to use the lift or not? Okay, so that's why you need to plan for the escape routes. And then number four, emergency contact information. Who are you going to contact if there any emergency or any fires or something happen to you? Okay, so who are you going to contact? And then next, specific roles and responsibility. You know, if the fire or emergency happen during your event, you know who are going to responsible for that. Okay, so that people or that in charge or person in charge, they must contact that particular person or that particular organization in order to solve that particular problem. So many particular, right? Okay, and then we have designated assembly point location. So after that incidents, where are we going to assemble? Okay, so after assemble, we need to do the head count information. For example, in our event, we have 100 people, but after we assemble that point, after we assemble to that point, and then only 98 people are there. So where are those two people? Okay, so you need to find where those two people are they still alive or not? Are they burned in that fires, or they are still in that toilet, or where else? Okay, so you need to check whether they are still in that building of fire or not. Okay, so that's why it is important to have this checklist to avoid any risk that will happen. Okay, so is that clear? Okay, so let's discuss some specific emergencies on how you should respond. Okay, so maybe you can share with us, you can share with me what are the things or what emergencies or what risks that will happen if we conduct an event. Okay, all right. Okay, so now I have an example. Okay, so this is an example of fire, right? So if there is a fire, so what you are going to do? The first one that you need to do is immediately evacuate all guests. So even though you are in a building, so you have known where is the exits for your event. So you need to evacuate everyone out. You need to chase everyone out from that place, and then you call 999. Okay, in Malaysia you have to call 999, and then you need to give much information as possible to that operator. For example, where are you now? So so the fire is originated from what else, from the switch or from any place. Okay, so what type of fire, so the location. So that are the things that you need to do when there is a fire. Okay, so all right, so that's all. So that's all for now. So that's all for our chapter today. So I think you have learned a lot about this chapter. So thank you very much for your kind attention for my class today. So I hope I will see you guys for next class, and I hope you are not getting bored of seeing my face. Right? So thank you very much, everyone. So I will see you guys by next week. Bye bye.